And joining us now is Douglas Holtz-Eakin, president of the American Action Forum and a former director of the Congressional Budget Office, and Politico White House correspondent Eugene Daniels. Welcome both. So, Douglas, what are your takeaways from the jobs report first?
Solid, unspectacular, and it's not going to change anyone's mind. If you thought the Fed was moving too fast, you still think that. If you're the Fed, you still think we're going to go another 75 basis points in November, and we're going to wait to see inflation diminish. And I think for most people, the lesson is this is going to take a long time. Chairman Powell warned everyone it would take years to get to the 2% target, and this is another reminder.
And do you think they have to get to the 2% target? They got a late start. Everyone is acknowledging that now, including the chairman.
They got a late start, and so what you're seeing is a rapid attempt to get to, quote, neutral. Everyone has a different idea what neutral is. And then I think there'll be a more moderate pace of rate increases, if any at all. But they have committed to getting to 2%. Their credibility is on the line, and they are dead set on fulfilling that objective.
And to do it without tipping into recession?
No guarantee on that front. We've seen the Fed, as a group, get the term soft landing out of their vocabulary. They're not talking about that anymore. They're going to keep at it. They say that a lot. And it will be restrictive, and they've warned us about pain for American households and businesses. All of that is code word for, yeah, they could happen.
And, Eugene, the White House has been so restrained in terms of, especially after the 4 years of Donald Trump, not beating up on the Fed. They're leaving the Fed alone to do what it's doing. Nobody has any illusions anymore about inflation coming down or being transitory. Everybody was wrong about that in terms of the political impact. So between now and the midterms, it's a real political problem. The Republicans are just, zeroing in on inflation and pivoting every abortion question to an answer about inflation.
Yeah, I mean, it's kind of like, everyone's able to choose what they want to talk about every time we see one of these jobs numbers. The thing that you're going to hear and have heard from this White House is the pace of adding more jobs, that the unemployment rate fell. Those are good things for the country. But then we also know that means, as was just said, that the Fed is going to have to raise interest rates. And what does that do for the possibility of a recession? And I think, this is something this White House has had to deal with when it comes to their economic messaging for months and months and months now, right? They have a lot to show when it comes to talking about where we're adding jobs, people are getting back to work. This is a good thing for the country. But then at the same time, the president has also had to deal with one change, everyone realizing that it wasn't transitory, as you said, but also that inflation hurts American families. And so they're trying to tinker around the edges in dealing with rising costs for families, right? You can look at that bill they just had that passed, the reconciliation bill dealing with healthcare. And so that is their focus, is trying to do that around the edges. But it's going to be tough moving into the election.
And Doug, let's talk about gas prices, because gas prices were going up even in anticipation of all the signals coming from OPEC plus, the Saudis and the Russians. And then it happened, their announcement, in terms of 2 million barrels a day, that is a lot. And so it's a real gut punch from the Saudis. And it shows that they're siding with Russia on Ukraine. And this, helps Russia continue to get war profits, oil profits for the war. It helps Iran as prices go up, because they're still managing to trade despite sanctions. And it really totally screws the White House going into the midterms.
Well, it's certainly bad news for the White House. I mean, the most visible inflation is gasoline, and we've seen how potent that can be politically in the past. The real wild card here is, in fact, China. China has slowed dramatically. Many people think they're actually in a recession, and that explains the weakness of global oil prices, and they're now trying to shore that up by cutting back on production. If China recovers, we're going to see reduced supply and a big jump in demand, and would be a quite dramatic moment. And we get a big spike in oil prices and gasoline prices once again.
Do you see this as the Saudis punishing Joe Biden for having called MBS a pariah and all the rest? Or do you see this as Saudi self-interest? Because with oil going below $80 a barrel, they could see it going down to 70, maybe even in the 60s if this continued, and they, have their own oil budget to deal with.
So you can see it either way. But I think it's important for the U.S. to think about its self-interest, and it has the ability.
What can the president do?
The president could adopt a strategy that takes advantage of the oil reserves that we have. We can insulate ourselves to a much greater extent than we are, and still maintain his climate goals by having some sort of price on carbon that gives people incentives to shift away from these fuels. And that's a strategy that's been explored a lot. They rejected it in favor of saying no to coal, no to oil, and that leaves them exposed to these international shifts. So I think they've got the wrong climate strategy, and it's backed them into a corner on oil again and again. They might want to rethink that.
Thank you so much, Douglas Holtz-Eakin and Eugene Daniels. Thanks to you. And joining us now, Deputy Treasury Secretary